The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We take a look at the German DAX. As you can see, it's in a little bit of a different pattern that we have here in the stock market. But before we do that, we really need to talk about what's going on with this thing with GameStop. Folks, we've been through this before. It was called the SOS Bandits. Those are the ones back in the early. I hope Tom O'Brien's listening because he certainly knows. He knew Harvey Houtkin. I met him once, but he basically changed the way that the New York Stock Exchange did business. They were always, whenever you went on the floor, the old joke was quarter half, quarter half, quarter half. In other words, if you wanted to buy at a quarter, you had to put your order in at a quarter. So you buy at a quarter, sell at a half, buy at a quarter, sell at a half, buy a quarter, quarter half, quarter half, quarter half. You heard that all day long when they were doing it by hands. Of course, we went to electronic trading, and when we did, it was basically the SOS Bandits, as I recall, and this is 20-some years ago, and I don't do any stocks, but they made the NASDAQ go to single digits, decimals, and pretty soon the New York Stock Exchange came on. It changed it. Bobby Howard, who was one of my good friends, Jay Cross friend, was a member of the New York Stock Exchange. When we would go into New York, we would stay on Bobby's yacht down there in the near Wall Street that he had, right in the water there next to the building. And he said it cost him $6 million a year just in fills because he did so much business. So anyway, let's go on. Let's just show you what's happening in the world, folks. Nothing really different is happening than it was in 2000. How high it's going to go, I don't know, but it's doing the same thing. Look at this. This is one of the stocks that we used to follow. Well, some of the folks at TFNN used to follow. It's one of the I think it's this is a marijuana stock, as I recall. You notice the low was 2. You see that down there? The low was 2, and now we're trading at 18. It's up 9 times. Folks, let me just give you an idea of what Telray did. Let's just take a quick look at it. I remember this because we used to talk about it. And here is this is what I posted this a long, long time ago. And I just happened to have it in there, but it had a high of almost 300 and it went to 2. Okay, you see the 382 retracement there at 180, and then down here to D where it got to 40, and then it kept going lower and lower. We had a Gartley pattern at 46 or something like that, and it went down to 2, and now it's doing nothing. So we're not seeing anything different. That we really aren't. And when they try to explain to you, you're going to hear both sides of the story. But it's really, to me, in my opinion, I don't think it's any different than the SOS Bandits. One of the smartest guys in Wall Street is Tom Sasnoff, the guy that does the trade think what you swim, and he's a really smart dude, folks. And he said this is here to stay, and it's nothing different than what we've done before, is what he said. So you got to listen to somebody like him. So I don't know. What they did this morning, I heard from 2 people in Hong Kong who were up in the middle of the night watching it. It's called the web-based, something about web or something, WAB or something, What's Up Bets or something like that. They start pumping silver, and that's exactly what happened. If you take a look, gold finally caught up to it, but take a look here. What happened to silver? Silver took a nice little run from about, let's get it over here, from about 20, I think we were around 26 and a half. We went to 27 and a half in Wall Street Bets. Thank you, Z. That's what it's called, WBS, Wall Street Bets. And that's what it, and they start pumping. There's nothing wrong with that, folks. That's just the name of the game. And this is what we've done before. you don't have to stand in front of it. If they're buying, you don't have to sell in front of it. I mean, that's basically what you're looking at. Now, Rich Anderson was kind enough to send this particular chart that's very interesting, and it shows the relationship. Look at going back to 1990. You see the put call ratios. This is a Wall Street most popular bet. Look at the run that we're having here. You see, we had that run from 94 all the way up to 99. We topped in March of 2000, and we went all the way down. 87. We lost 87% of the NASDAQ. And here we are. We're having this big run here, as you can see, and here in 2021. But, maybe it'll stop. Maybe it wouldn't. The whole thing is that you got to find a place, to put a stop in. If you're going to try to go short, and you got to put a stop in if you're going to go long, either one. So here, okay, there's somebody posted something. Mr. Z posted some things about Dennis Gartman making a historical comparison. If you want to call in, Mr. Z, and talk about that, I'd be more than happy to. But that's I used to read about this stuff and the reminiscences of a stock operator, but it's here to stay, folks. So don't be alarmed by it. That's for sure. So that's the main thing you want to keep in mind. But many of these have happened in the past. Look at this. I don't know what this stock is, but someone asked me to look at it. It's called TSM, and it was trading in 2015 at 20. And now it's trading at 125. Well, that's nothing compared to what some of these others have done. So we're seeing the same type of thing. There's nothing any different. The reason why these guys got in bad trouble, what do they call those guys? I forget what the name of them is. But they're looking for stocks that have a high short interest, okay, and where there is a possibility where it can be a short squeeze. In other words, not enough stocks outstanding or something like that. They've got some parameters to look at, and then when those parameters list, then they go. But they're on their little social media thing, and they're talking about what they're doing. And I don't think there's anything wrong with that. That's no different than a squawk box that we used to have in what you call it. So that's what I think it is. That's my 2 cents worth. I don't know if it's going to mean anything. But when I heard Tom Sosnoff said it's here to stay, you better listen to that guy. He's a smart dude. And but Tom O'Brien really remembers more about that Harvey Houtkin stuff, because I remember back in 1998 when we were in New York or something. It's before I knew Tom. I thought they were on a program together or something like that, or they knew each other. But Harvey Houtkin really changed the business. He really did. We got a caller from California. Brent, how are you doing?
Oh, good morning, Larry. How are you?
I'm good, Brent. What can I help you with, buddy? Hey, you having any trouble with you have, excuse me for interrupting. You have any trouble with the rain over there? Because you're near Salinas, aren't you?
I'm a bit north of that. No, it's actually great to be getting. So my brother lives in San Juan Bautista, which is right by there.
Okay, but they're supposed to be getting a lot of mudslides.
Really, it's something we need. We were having a very dry period there, and now it's starting to come through for us, and we're getting the snowpack we need. And so, no, at this point, it's a good thing. At least up here it is.
Hey, listen, we got to take a break, pal. Can you stay with us?
Absolutely.
We'll be back in 2 minutes. We got to pay a few bills. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We're talking with Brent out of California. What's happening, my friend? What can we help you with?
Well, I just had to comment, Larry, on the fact that what's happened with this whole GameStop thing, and to hear these hedge funds crying about the fact they took these heavy losses, seems to me almost laughable. It's like we're all in this market by choice. They didn't have to go short. Nobody made them do that. And so, the fact they were on the wrong side of the trade, that's kind of too bad. And to hear them crying about, we've got to change the rules, this is the injustice of this is just, to me, is laughable. So I just, I'm sure they had no problem when they were bankrupting companies, driving them down till they were worth nothing, and to have this happen to them, it's just, that's part of the game. You make the choice to be in the market, and things are going to happen one way or the other. And to hear them kind of crying about it is, to me, I think it's kind of funny in my mind.
Well, we heard this story 25 years ago when the SOS bandits were changing the way they traded stocks on the New York Stock Exchange and at the NASDAQ and stuff. And they said it was going to change the world and all that stuff. And all it did is brought in a whole lot more people into the trading. And this is probably going to do the same thing with Robinhood. I heard Tom Sosnoff, I mentioned to folks here at TFNN earlier, who's one of the smartest dudes on Wall Street, said, hey, this is no big deal that they're going to be doing this, and you get used to it, and it's not going to affect too much. So that's my 2 cents worth, and I listened to what he said, so I got to pay attention to what he said. But, I don't trade stocks, so I'm not involved with it. If they start messing around with Forex and futures, then maybe I'll complain a little bit. But right now we're running okay, so we'll see what happens.
Yeah. Well, just have good luck with your trading, Larry. Have a great day. And
hey, you too, my friend. And stay safe over there, and I hope the mudslides don't get you.
I hope so, too. All right. Take care, Larry.
All right. See you later, pal.
All right. Bye. All right.
You bet. Okay, folks, we've got a couple more minutes here before we have Shane Smolian coming on. But I wanted to reiterate, I'm going to keep preaching this because I kept preaching it when it was trading at 10. And I said you should always be ready to be long volatility. And now, especially for this coming year that we see, 2020 will set all kinds of records. Here we are at our all-time highs, folks, and look where the VIX is trading. I mean, this is incredible. Before, when we were at all-time highs, the VIX was trading at 10. So they're building in this volatility and everything. And when we're seeing these things happening with Read It and all this other stuff, that's what's happening. That's why more than ever, I always preach this, but, sometimes we don't always do what we preach. But you've got to be able to come in and put a stop in on something, because if you don't, you're telling the market that you know more than it does. And believe me, that will never happen. So you've got to protect yourself. Now, many people put their stops too close and they get banged around a little bit, and I can certainly understand that. But you've got to be able to do it. We're going to have incredible volatility. You can see that band up there at 53. I think we will see times where we'll spend several months above 53 in volatility. And we might even see, levels like we had back in, 1989 and stuff. So that could easily happen. So we're in interesting times, as the old Chinese curse says. So just remember that. That's a really big thing to go through. That's the main thing. Now, the period of when they're watching GameStop, I mean, it used to be a very small stop. Now it's probably got more value than we have with the than Ford Motor Company or something like that. But you really want to be able to realize that when you're dealing with something like that, you've got to be able to put a stop in. We heard this story. I'll put the chart up again just to show you how silly it got. This was back in 2018 when the marijuana stocks were really big, right? You'll see here, look at that. That thing got all the way up to 280 and went all the way down to $2 a share, folks. So I'm not saying GameStop is going to do that, but if you ever go into a GameStop store to look at it, it looks like one of the old Blockbuster stores right before they went tapioca. So, it doesn't have the fundamental news of, cancer cure or anything like that. This is just a pure case of, somebody getting stuck short, and that's it. You remember Jim Chanos, remember how bearish he was on Tesla when it was 170? He said the stock was literally worthless. It had no earnings, and Tesla's 800 and something now. He had to change his mind somewhere. I know he didn't go long because he said that on TV several times. But just when in Roy Longstreet's book, Viewpoints of a Commodity Trader, he says the first mistake teaches, the second mistake kills. Well, the first mistake is you got into a position that doesn't work, okay? The second mistake is you didn't do anything about it. And that's the difference between a professional trader and a non-professional trader. A professional trader will realize that, hey, something's wrong here and I better get the heck out of Dodge. And that's what you got to do. I mean, it's okay to get in there and trade GameStop if you want to, but do it with a plan. That's basically it. So it's, Bo's just pointed here, after the 5-to-1 split, Tesla's $4,000 a share. Because it's 800 and something now, 5-to-1. It's 800. Very good math, Bo. $5,000 a share is what it would be trading at. $4,000 a share. That's a lot of bread. So anyway, that's a lot more than Apple even. Who knows? But we'll see. Well, hey, look, we're in interesting times, as they say. Try your plating and stick to it. Mr. Z, when he posts his stuff into the room, he tells you where he's getting in and where he's getting out. And you can't ask for anything more with that. Yes, if you want to buy the Reminiscence of a Stock Operator, written by Edwin Lefevre, there are a whole bunch of them on Amazon. You can get them for $10. But if you haven't read that book, folks, I promise you that I have read that book at least 50 times. I mean, at least 50 times. I got the book in 65 or something like that. I don't remember exactly where I got it, but I've read the book at least 50 times. So anyway, by the way, folks, this is the one of the saddest days of my life. January 29th, I'll tell you the quick story, is in New York, working for Eli Lilly with J. Walter Thompson. I got pulled out of a meeting by one of the executives at J.W. Thompson, and he said, "You're going to the airport, you're flying home." And I said, "Why?" He said, "Your mother has had a problem and she's in the hospital." They had the private jet fly me to Terre Haute, Indiana in the middle of a terrible storm. I mean, it was so bad you wouldn't believe it. And I got to the hospital about 3 minutes before she passed away, and she had a massive coronary aneurysm, and she was in a coma, and I got there to hold her hand, and then she died right away. But she was only 47 years old. I was 31 at the time, and I had never forgotten that. I think about her every day, and those are the things that you got to remember in life. But I was one of the people that was very close to his mother. My wife's oldest son is the doctor calls his mother at least once or twice a day, and she looks forward to it so very much. Anyway, let's move on here. We're going to have Shane Smullian on here pretty close to the half hour, and he always has some good stuff to talk to us about, especially about the Fed and what they're doing. So we'll see what transpires with this stuff that's going on. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have the Wolfman himself, Shane, on the line. What's happening, my friend?
Good morning, Larry. How are you?
I am good, my friend. Very good.
You know, it's funny you mentioned Tom Sosnoff. Not only is he a brilliant man, he every time I've written him, he's returned every single email, and the setup that he's done over there at Tasty Trades, it's incredible. The educational setup, it's very similar to TFNN in a lot of ways, and I think to me that speaks a lot more about him too, because it's incredible what he's done there.
Well, he sure is, and he is a smart dude, and he's a nice guy too. A little eccentric to
nice
some
guy.
People, but a nice guy. Go ahead, my friend. Show us what you're looking at.
Okay, so I like to start out with the Fear and Greed Index here. So Fear and Greed Index is it's low right now because obviously we had that sell-off earlier in the week on Wednesday, and so it's at 41. So this is dipping down. So this is now getting into some contrarian buy territory, you would say, in terms of that. But there are some very big things going on right now in the market. So the first thing I want to talk about is the Robinhood, because this is the GameStop. This is what's on everybody's mind. And I want to talk about the Saturn-Uranus squares. Now, these Saturn-Uranus squares, the market does not like this interaction at all. It's a very important transit. But to me, this is playing out clearly with the Wall Street versus the Robinhood traders. And let me explain to you why. So this is just a little bit of astrology background. But Saturn is the establishment, okay? So this is the Wall Street. This is the hedge funds. And Uranus is common groups of people, networks. So that's the internet. That's chat rooms. That's the retail trader. So again, the Robinhood traders represent the Reddit, the retail and networks, and the Wall Street, like I said, is the Saturn and the hedge funds, and that's what you would call the deep state, right? Because Wall Street is the oldest of them all, and so it's a square is a power struggle. So the first thing we saw was that the Uranus energy came in, and through these networks, people, okay, and the common trader, the retailer, taking down a fund, which is the Saturn. And then Saturn strikes back the next day and restricts the buying of the GameStop. So to me, this is symbolized by the Saturn-Uranus squares very clearly to me. This is very clearly Uranus versus Saturn type of energy. Ultimately, Saturn wins in the end. Saturn is stronger, but I thought that was interesting to kind of show that. This is a chart of the GameStop here. So, everybody knows what happened. They raided this hedge fund by trying to buy. And then Robinhood cuts off the ability to buy, and then the stop drops and goes back up, and now it's falling again. So interesting, phenomenon. And as you pointed out, this type of stuff happens over and over in Wall Street. But the way that this one happened, I feel was very clearly represented in the charts. So I thought that was interesting just to point that out. And there's more coming this month. The Saturn-Uranus squares are actually peaking for the first of three is peaking this February. So the first slide I want to talk about here in relation to the markets is what is the Fed up to? Well, there's some interesting developments here. The Fed is still continuing the pace of QE at about $120 billion per month. Contrast that to during the crisis, they had up to $90 billion in a day, but it's still quantitative easing. Now, the 5 major lending programs ended on 12/31. So there's some disturbing intraday patterns that are developing now around the Fed activity. So there are some questions to ask here in regards to this. Was it a mistake to shut down these lending facilities? Will this shutdown affect the markets? Is there evidence that this is hurting the market? So these are the things that we need to ask. And we haven't had much time to look at the markets and how this would affect the markets. And we actually have a few weeks now to look at this. We have about a month of data to look at this. So this is a chart here of the Fed juice down here and the S&P up here, and this is the S&P up here in the white, and then the Fed juice is down here. Now I put a little red arrow here to show you where the Fed shuts down this emergency lending. At first it looked like it wasn't a problem, but then you can see the market is kind of faltering now, and I think it could be a problem now. I mean, we've had a month to look at this. The Fed is still doing the quantitative easing. This is a more zoomed in picture here. But you can see here the Fed is ramping things up, and the market fell into that. It had that rebound on Thursday, which we expected on Thursday. But now, now we're coming into a period here where, from the astrological standpoint and the Fed juice, I have this Fed juice now going into a sell. Things could get a little rough for the markets. And I think this is affecting things. I think this, when you have these disruptions and the Fed can't come in with the TALF, with the primary corporate credit facilities, these markets stop functioning properly. So when you get these dislocations, they've taken away the Fed's ability now to smooth things out in these other markets. So what happens is when you have a dislocation like we saw on Wednesday, it tends to be, the effects are stronger, in my opinion, based upon what's happening here. So what's the state of the S&P here? So Thursday was the strongest statistic up on the S&P. So I expected that to bounce on Thursday. We actually had on our fast Fed system, we had a nice long trade on that. We were long on Wednesday at the close it out for a one-day trade there. But now that was a one-day phenomenon. We had Sun conjunct Jupiter. We had a lot of positive energy. That Thursday was just like packed with positive. That was a one-day phenomenon. Now we're seeing a different picture. The Fed juice is on pace for a sell. The dollar juice is on pace for a sell. And the planetary speed index is going to be going into a sell at the close. So what I could tell you now is that we're at a possible important top in the S&P. And we haven't seen a setup like this in a long time. I mean, a lot of people are bearish all the time, and I'm not. But this is a time where you should be cautious on the markets. So what are the significant astro events? Well, Mercury's making a retrograde tomorrow. So why should you care about that? Well, when the markets are falling and there's dislocations occurring around the Mercury retrograde, this happens around 3 days of this event. It's without exception. And I'm going to show you a few slides of market dislocations around the retrograde. But this always happens. When the market's really going to take a big dive, it's around this period. So we always have to pay attention around the Mercury retrograde. The planetary speed index is at a high, and the Saturn-Uranus squares are coming. And the markets do not like this transit. I will emphasize that again. They do not like this transit. And this is one of the few transits that I pay attention to, single transits. So I look at combinations. I look at the planetary speed index. I look at the general combined transits. But these are like hundreds and thousands of combinations. This is a single one, and it's a big one. So Saturn-Uranus is very pronounced with its effects on the markets. This happened in 2008 when we had the decline. That was an opposition. But if you go back and look, whenever you get a harmonic, a fourth or an eighth harmonic on Saturn-Uranus, which those are the hard aspects, the market doesn't like it. So that's we're at a point right now that we haven't been at in a long time. So what I'm going to do now is I'm going to show you a slide here. This is the 1987 market crash. So, down here, you can go back through time and look at this, and it always shows up.
Hey, we'll take a break here, and we'll be right back with the Wolf Trader, Shane Smolian. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Direxion's daily S&P 500 bull and bear leveraged ETFs. Direxion leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit direxioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back with Shane Smolian, Wolf Trader, my friend. I really like this chart. Would you explain to us what we're looking at here in 1987?
Sure. So this is really important. And I want everybody to pay attention to this one because in 1987 we had a tight stellium of planets, really tight conjunct. And you talked about this with Arch the other day on the radio. We have a stellium right now, and when you have those planets that are concentrated like that, a lot of times that can bring the market into a high because it's kind of like everybody going in the same direction. And so this is the 1987 chart. Now the black is the S&P and the red is the planetary speed index. So you can see that as this planetary speed index falls, the market it's falling down. But on that last plunge down into here, this was in October of 1987 into here, this is really when the market started to have some big selling into here. Now, I've also included in here another single-ish aspect, which is the Mercury station, which is this little spike into here. I want you to pay attention to that because every time there's a dislocation in the market, a big one, this Mercury is making a station within 3 days of it. And there's no exceptions to this. I mean, it's like picking low fruit on a tree. You can go back to any crash and it's there. So the reason why I wanted to show this is we have a tight stellium now. We have a planetary speed index at a high right now. And we have this station coming up. So, you know, it's really incredible when I like, and this is why I like the speed index, because I feel personally that this is the best predictor of the market. You can go to any crash. Like I'll go to 2007 here. Here's another. I'm sorry, 2008. This was the financial crisis. This was the last Saturn-Uranus hard aspect. Okay, this was the opposition, the fourth harmonic. You can see that when this planetary speed index is falling here, here's your big decline. But the biggest decline comes right around the Mercury station here. So again, this little blip up here on the graph, that's the Mercury station. So when these two are working together, you can have some issues in the market, okay? And the same thing happened with COVID. It's just there's no exceptions to this. So this is a graph of where we are right now. So this is October, November, December, January. And you can go back to October here. Take a look back here in October. You have the planetary speed index making a high. You have a Mercury station right here, right? And the planetary speed index is falling. So again, you got this setup here, but right now here's the setup over here on the right side. I'll put the arrow here so people can see it. We're at a peak in the planetary speed index, right? And we have a Mercury station again. So it's in a lot of ways it looks like this 1987 because you have this falling planetary speed index. you have a Mercury station, and then we already started to see some issues with the market. Now, because we have the Fed now, it adds a whole new layer of complexion to this. So this is very complicated now, because in 87 and 2008, we didn't have the Fed. I mean, we had the Fed, but it wasn't like now. So this is the Fed Use 3.0. This is what I look at. These are my two primary indicators here, these Astro indicators. So I try to simplify it to really give it to the two main drivers of the S&P. The dollar juice does affect this too, but really the Fed juice here, it's on pace to go into a sell today, and the planetary speed index makes that sell today. So you actually have a setup now that you have not had in a long, long time, that you could actually start to see some hard selling coming into this market. Now, we'll put a disclaimer in there. The Fed is going to do everything they can on a daily basis to come in and stop the selling. We're in quantitative easing, but we've already started to see here. We saw this dislocation here. We had this bounce up, and I said we really have to wait till Friday to see how strong this is, and it's showing some weakness now into Friday. Watch the market right around between now, usually 9:39, somewhere around there, and 10:30. That's the first push by the Fed. After 1:30, the market's been showing a disturbing trend of showing weakness. Now, it doesn't do that every day, but the fact that it's doing that and at 3 o'clock on, it's getting weak, that's not a good sign, because that means that the market is really wanting to, it's showing a resistance to what the Fed is doing. And I think that those emergency lending programs shutting down was a bad idea, because I think they're struggling to get ahead of this market now. With what's going on. So that you've got this setup here, you've got the Mercury station, you've got the planetary speed index, you've got the Saturn-Uranus squares, you've got the Fed juice. So all of this is lining up now for the first time in a long, long time that we've seen something like this. And I'm not a bear. I mean, if you know me, Larry, I'm going long and short all the time on the market.
You're a wolf. You're a wolf.
I'm a wolf. So wolves, we hunt in the pack. We got the wolf pack here. But this is the dollar juice. I track the dollar, how it affects the S&P too. This is finally going into a sell too. I don't have it quite on the chart, but it's on pace. So these charts that I'm showing you, I'm projecting what I think will happen at the close. It could change at the close, but from what I see now, I think the Fed juice is going to be in a sell at the close. So I really feel like this is a time to be cautious on the markets. The Fed is still there. The Fed is still strong, but what you see with the Fed, and especially this Uranus energy, is you see these dislocations, and then you see this sharp rebounds also with the computer trading and the algos. So the problem is on this S&P, if you're going to get short on it, what happens is it's falling, and then it does these huge 180s, and then it might head back down in the huge 180s. So you see these big chops lower, and it makes it very difficult to short. They make it very difficult to short this thing. But if you're looking for a setup for this market to actually be motivated to short this, this is the time to do it cautiously, because in terms of everything lining up on your side, it's almost impossible to short the S&P, as everybody knows. But now you actually have a chance now. So now the next slide here I want to talk about is what's wrong with gold. Gold has been in this positive seasonal. But it's been very quiet. And so, this is one of the things that I've been paying attention to because the seasonals are positive right now. We're in a positive seasonal with gold, yet it's been falling. And so this is not a good sign for gold. And I tell people, if gold is not rallying by mid-February, let's just say, or late February, I have this on the metals letter, I give the exact dates, then there could be trouble ahead on the gold, because if it's falling into its seasonal peak, then when the seasonal peak comes, it could really have some issues. So the one thing though that is developing today, there's a possible fear trade developing. So silver and gold have been getting strong in the last couple of days, particularly silver. Silver is looking a lot stronger than gold, but the fact that this is lining up like this now, that the S&P is having these sell signals come in, and now you're actually starting to see gold and silver start to show some advancing into this. This is indicating possible trouble for the S&P too, because this is what we would call the classical fear trade. where, gold and silver, the metals are rallying and the S&P would be falling. Now, this is the silver chart here. I just re-optimized this, so I have this on pace for a buy today on the Fed use, and the Astro is actually going into a buy today on this too. So, we still have about 3 weeks left on this positive seasonal, so it's possible that, these markets could lift up for a few weeks and then fall back down again after, we hit that seasonal peak on gold. So we'll talk about that when we get back.
We sure will. We'll be right back, folks, with Shane Smolian, wolftrader.com.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Shane Smolian, wolftrader.com, and I want to apologize to Scott for not getting the call. I didn't see it, my friend. I hope you can call in another time. He asked a question about volatility. Do you have anything on volatility that we could use, Shane?
Yeah, actually I do. Let's talk about this on the gold chart here. This is gold, by the way, and there's different ways to measure volatility, but if you're looking for an increase of volatility, a really good way is on these Bollinger Bands. When they start to come in like this, the market is usually ready to do a big move. And so what's interesting is that they've come in really tight on gold and silver, And then, of course, we have this breakout today on this. So, that's one of the things that I look at. So if you want to understand volatility, I think a very down and dirty way to do it is just to put the Bollinger Bands on the chart and look when they're getting close together, and then but it doesn't tell you the direction. But that tells you right before the volatility is about to usually expand when those Bollinger Bands get tied into there. And so when we see a Bollinger Band width get really, really wide, like you see here in gold, you see right here where it starts to get wide into here after this big sell-off, that's when the volatility usually starts to die down. So a wide Bollinger Band usually means the volatility is about to die down. A narrow Bollinger Band usually means the volatility is about to pick up. Now, there's other ways to measure this. There's implied volatility, which, of course, all of the option sellers love that when the volatility is high because they can sell the premium. But this is a quick way. If you want to look at a chart and just know, like I was looking at gold and I was thinking, wow, those Bollinger Bands, same thing on silver, they're really getting close together here. Same thing on silver got close here. That's something that you can look at here. Here's another example here. This is corn. And so when you look at these Bollinger Bands, you can see they got really, really narrow into here. This was back into December, right before the big breakout. And then you can see how these Bollinger Bands are expanding into here. And so, when they hit a maximum length into there, that's when, things start to settle down a little bit. So that's basically to look at. So wolftraderfutures.com if you want to check it out. I'm Shane Smullian. Thanks for listening.
Hey, you bet. Thanks, folks. We'll see you next week. Be good and be safe.